As one of the major indicators for the valuation of public chains, total value locked, TVL, measures the level of prosperity and the fundamentals of a public chain's ecosystem, especially for public chains with extensive applications on DeFi. During the short bull market that has just ended, native public chain tokens differed from one another in terms of their performance in the secondary market. Even for public chains with moderate performance like ViaBTC, the TVL rebounded after the May 19th crash. However, their token prices have been lower than those of other public chains, e.g. Solana, because the way TVL is calculated does not correctly reflect the actual TVL and capital flows. In fact, non-stablecoins constitute a significant proportion of TVL, and the prices of many non-stable assets are subject to market swings. This has led to a flawed evaluation method of price analysis based on token prices, and the right way to calculate the TVL trends should eliminate the impact of token prices movement. In this article, 3 TVL adjustment methods that exclude the impact of token prices are introduced. Some interesting analysis using the adjusted TVL is also provided. The data used by the research are the daily TVL statistics of the top 10 public chains, as per DeFiLlama's TVL ranking, from February 3, 2021, to September 25, 2021, and the closing price of the corresponding tokens. In terms of the TVL trend, the ViaBTC public chain was clearly hit by the May 19th crash. After around 2 months of horizontal price movement, its TVL significantly rebounded. As for Solana, the TVL started growing from the early days of July and soared since September. Other public chains, such as Terra and Avalanche, also performed pretty well. However, as mentioned earlier, due to the major fluctuation of token prices and the flaw of normal TVL calculation, the actual TVL concerning the ecosystem of the public chains may not shown properly by the picture. Figure 1, Data Source, ViaBTC Capital, CoinEx, DeFiLlama. It is very difficult to measure TVL with one numerical value because the tokens locked on a public chain come in a great variety and are subject to rapid updates. The unified measurement based on the USDT-margined value of all tokens is a comparatively more feasible approach. However, since the USDT-margined value also suffers from great volatility, the TVL determined through such an approach may be distorted. One ideal method of adjustment, Method 1, is to establish a baseline time point and record the price of all the locked tokens at this time point. Whenever the TVL is calculated, the current TVL will be determined by the number of the various tokens in the present network, and the baseline token price, which is expressed in the following formula. In the above formula, is the adjusted TVL at the given time t, is the number of tokens at time t. Using this adjusted TVL, we can conduct reliable horizontal comparisons between different public chains and reflect on the status of a given public chain. This method has been adopted by DAppRadar for the calculation of the project-specific TVL. This method is relatively precise and is suited for calculating TVL of a specific project. However, when considering TVL adjustment of an entire public chain, the above method suffers from the unavailability of data and the rapid updates of the locked tokens. For example, the baseline price records may not include the newly launched tokens with high TVL. Next, let's move to another method of TVL adjustment, Method 2. Although this method is less accurate, it features easier data acquisition/processing and can be adopted more extensively. Moreover, using Method 2, we can also reasonably adjust most public chains' TVL. Method 2 also first determines a baseline time point, however, it only records the price of the native token, e.g., ViaBTC's BNB.